that shows, it's the form that shows the breakdown of your commissions as well as the brokerage's commissions and any deductions in that current transaction. It's also instructions to the escrow officer as to how much and to who they're cutting checks for the day of closing for your particular transaction. So that's what the DA is. Escrow office usually calls it like commission instructions, but we call it DA. They need the DA in order to cut checks for your closing. If you don't provide them the DA, they're not going to be able to distribute the commissions from your transaction. So that's what the DA is. The DA is also used for you to keep track of your income as an independent contractor, and it also shows you what will be included in your 1099 and deductions that you should be keeping track of, so that at the end of the year you can provide that to your CPA for your bookkeeping. Okay, so how do you receive a DA? Either you, or if you have a transaction coordinator, they would submit a commissions in command MC. So they would go in, and from your opportunity for that particular transaction, you or your TC will submit commission breakdowns in command. And once they do that, we'll create a DA for you and send it via email for you to look over and review. Okay, so when must you submit a DA request? Rule of thumb, at least 2 weeks prior to closing. You could do it sooner, but no later than 2 weeks before closing. And this is to ensure that you get your commissions on time. So for us to prepare the DA, for you to look over the DA breakdown and make sure that the breakdown is correct. It's your responsibility to look over that DA and say, okay, this is correct. This is what I should be getting. These are the deductions that I requested from my transaction, and okay, it's approved. And then it'll be sent from either you or your TC will forward it to the escrow officer to prepare for the checks to come in the day of closing. If you submit the DA to the escrow officer the day of recordation or the day of closing, you're not going to get it the day of closing because it takes time for them to prep the checks and all of that. So that's why we give, rule of thumb, 2 weeks to submit it, because they need time to cut the checks and they need time to have the staff there prepare it. So because it's like a process, it needs to be done in a timely fashion. If you're late and last minute on your DA, then be prepared for your commission checks to be late as well, because it's a trickling effect. Okay. What amount on the DA will be included in my 1099? It's the net commissions amount. We're going to go over some sample DAs so that you could take a look at it and you'll know exactly what amount is going to be reported on your 1099 at the end of the year, and what will be taxable to you at the end of the year. Because it's not always the amount on your check that is on your 1099. It will not always be the case. Does anybody have any questions so far? Okay, moving on. Okay, so here's a sample DA. And this particular DA has no GET tax. So we're looking at, this is page 1. There's 2 pages to DA if it's just one agent on the transaction. and you're not splitting it with anyone, or if you're not on a team. And this is page one. Page one will show the basic information, which is the DA number, when it's scheduled to close, the sales price, the commissions amount. It'll also have the property address, and sometimes it'll have the title company and the closing officer's name. When you look at the first page, it's just a basic summary of the total commissions. So when you look, first line, right, Holly Investments LLC, that's also Keller Williams Honolulu or Keller Williams Realty Maui. That's the amount that will be going to the brokerage, right? The second line is the agent's name and the check amount that they'll be receiving. And below that will be all the line by line deductions from the agent's commissions that's going out for other expenses. And some of those deductions include if you wanted to gift home warranty to your client, that deduction would be on the bottom. You want to pay that as a gift and pay out their home warranty, that'll be there. The risk management fee will be there. If you're paying a TC and you want to pay them out through your transaction, that will be under deductions as well. If there is a referral fee going out, that would also be under there. And if you have a credit to the buyer or seller, that will also be in the deductions area. Okay, so the second page of the DA will have the detailed breakdown of your commission for that particular transaction. So on the top, it'll have the same thing, you know, the address, the DA number, the closing date, the sales price, and the total commission. But on the bottom, it has everything in detail. So it'll show you what type of transaction is this? Is this a buyer's transaction or a seller's transaction? And it'll show the unit, which is typically one, right? It'll show the gross, which is the gross amount that the agent is getting on the total commissions. So if your sales price is $560,000, the gross commissions is how much is multiplied by, well, okay, wait, let me start over. The sales price multiplied by the commission percentage. Usually it's 2.5, 3%, and that times your sales price is what the gross commissions is, the GCI. If you look under gross, more down, you'll see GCI, which is the same thing, gross and the GCI, and that's 14,000. And if you keep going down where it says 9,800, that is the associate's commission. So that amount is, the associate's commissions amount is your gross commission, GCI, times the agent's percentage split. So if you're on a 70-30 split and you receive 70%, that 9,800 is just the 14,000 multiplied by 80%. But in this case, the associate split is 70-30. So it's 14,000 times 70%. That equals the associate commission, the 9,800. That amount is still not the amount that you report on your 1099. So what this shows is your associate commissions is 9,800. That's your 70% split. Now you're going to have to take out associate royalty fees. Associate royalty fees is the franchise fee that goes straight to KWRI. So that amount is always capped at $3,000 per anniversary year. So after you hit $3,000, you don't need to pay the royalty until you reset on your next anniversary year. And the royalty is calculated by getting the GCI and you're timesing that by 6%. So in this particular example, it's the 14,000 times 6%, which is $840. So that's the associate royalty fee. Underneath that, you'll see net commissions. Net commissions of $8,960. That is the amount that's going to be reported on your 1099. That is the amount that you will be taxed on. So you get that amount by your associate commissions, right, of $9,800, and you're deducting the $840 associate royalty fee. And that'll equal your net commissions.
Can you say that again? That's calculated how?
So your net commission is calculated by the associate commissions of the 9,800. You minus the 9,800 by your royalty of $840. And that equals your net commission.
Okay.
So, and that's the amount that's reported on your 1099. So the net commissions is not necessarily the amount that you're going to receive from escrow. The check amount is not going to be the net commissions necessarily, because you might have other deductions. So if you go down, you'll see deductions, and it says $670. So that amount is any deductions that you instruct escrow to take out from your commissions to pay for your expenses, such as, you know, your TC fees. If you have any outstanding balances with the company that you wanted to pay through your transaction, or even paying for home warranty, credit to buyer, anything that you want paid out from your commissions that's an expense for you will be in the deductions area. So in this example, we have just the risk management fee and home warranty. So those two, the breakdown is on the bottom, and it shows line by line what the total deductions consists of, which is the $100 and the $570. That's what the deductions is made up of, right? So what you're doing is your net commissions minus the deductions equals the associate check. So the associate check is what you'll receive the day of closing. That's the check that will be cut to you from escrow. Any questions so far?
You're right back. I'm gonna Zoom.
Advertisements and everything that we do for the property selling or buying, does that count also? Do we have to put that in expenses?
Wait, I'm sorry. Can you say that again?
Can we deduct the advertisement expenses in there?
If you have, what do you mean? If you want to pay?
No, Kristy, let me jump in.
Okay.
The running of your business, the expenses you spend on your marketing and everything else, those don't go into escrow. You need to account for those with your accountant, your taxes, and your own personal record keeping.
Okay.
So those are not things that you put into escrow for deductions unless there was an agreement with your seller to reimburse you. Then those bills you could submit to escrow for reimbursement. So let's say that you paid for the M1 documents and you had the agreement that your seller was going to reimburse you at close, that you could submit for reimbursement, and it would come from the seller's net in a separate check to you.
Oh,
Thank you, Lisa.
okay, thank you.
Any other questions so far? Okay. Right underneath the associate check, you see company commission. So the company commission is the 30% that your brokerage is receiving. It's their 30% split. So that number is calculated by the GCI, which is 14,000. You times that by 30%, and that will equal the company commission, the 4,200. And right below that, you see pay to KW, the $5,040. That amount is calculated by, right above it, the company commission, the 4,200, plus the associate royalty, the $840. So if you add those two together, it equals $5,040. It'll equal the pay to KW. Any questions on that? Okay.
Yeah,
below-
Kristy, I've got a question. It's
Sure.
Bob Wills here.
Hi, Bob.
I'm looking at a DA that I have,
Uh,
and my company commission is one number, and my pay to KW is a higher number,
yes.
which makes sense if you add in the associate royalty, right?
Mhm.
I don't have anything in associate royalty, but yet the number went up from company commission. The company commission is 7,152. The pay to KW is 7,450, and under associate royalty, I got nothing. So it's kind of like, okay, how did that number go up there?
Ooh, interesting. Is there anything on page 2 of the DA that's not on this sample DA that you're
Yeah.
seeing right now?
Tax, is that the GE tax?
Yep, that's what it is.
Okay,
So we're
so,
gonna go through the GET tax.
okay, all right,
like,
great,
after.
thank you, thank
Okay.
you.
So if you go down after pay to KW, there's written volume. So the written volume is the sales price that your transaction closed with, which is 560,000. Closed sales volume, same thing, right? Adjusted volume may or may not be different. The adjusted volume is a formula for KW or RI awards purposes only. And we'll go further into detail on that formula few slides down. So this, and I'm going to be sending these slides again to everyone, but this is a breakdown of all the formulas on your DA. So the GCI and what that formula is, your associate commission, company commission, associate royalty, all of that. This is the breakdown so that you can use this as reference for any DAs that you receive. So this will be sent to everyone. Okay. Now we're going to go over the adjusted volume, the one that we were going over on the page 2 of the DA. This is for KWRI awards purposes only. And the way that they calculate it is it's your GCI divided by 3%. So for example, for this particular DA that we just saw earlier, right? The GCI was $14,000. So you divide that by 3%, and that equals 466,666. And so if we go back to the previous DA, you can see that the adjusted volume is the same amount, 466,666. So because not everybody receives the standard 3% commission, the adjusted volume may be different than the written volume or the sold volume. And that's because it differs from 3%, 2.5, and it equates the transaction to the commission received. So if the commission percentage is 3% of the sales price, then your adjusted volume equals the sales volume. It'll all be the same. But if the commission percentage is less than 3% of the sales price, then your adjusted volume is always going to be less than the price. And it's only for KWRI awards purposes. It's not something that counts towards RAM or MLS or High Central. It's just for KWRI awards purposes.
I have a quick question, Kristy.
Yes.
I was wondering, so of course, if it goes in reverse too, if you get like 3.5%, then your adjusted volume goes up.
Yeah.
Okay.
Because it'll be 14,000 divided by 3.5%, and it'll go up.
Okay, perfect. Thank you.
Kristy, could I ask a question?
Yes.
What is the reasoning behind that? I mean, it seems like obviously they're pushing, they're awarding you if you have a higher commission rate in your sale. Is there any other reason?
Yeah, the reason why they do this is because it's a KWRI, the formula is a KWRI equalizer, because not all commission percentages are 3%. You know, 3% is a standard, but sometimes it's 2.5, sometimes it's 2% based on different circumstances, sometimes it's 3.5. And so to equalize all of those different commission percentages, they use a formula to kind of center everything like an average for their awards purposes. That's just how they do it.
Gotcha. Okay. Thank you.
Okay, so this DA is a sample DA that includes GET. So typically some transactions will include GET, meaning the buyer or the seller someone will be paying GET for the particular transaction, okay? And when that happens, that just means that GET will be distributed equally to each person's commission amount, okay? So when we receive the GET, it is proportionate to your commission amount. I want to go over this. So general excise tax on transactions by island. So Oahu, Big Island, and Kauai, the GET is 4.712%. Maui and Molokai is 4.166%. Okay, so let's go back. So on this DA, so the first page, everything looks the same except for, if you look on the right upper right-hand corner, it says tax, right below commissions, okay? So if the sales price is $500,000 and your commission is $12,500, okay, that's your GCI. And they're saying that the total tax, the GET that they're gonna give you is $589. So now that $589 is calculated by, so this is a transaction in Honolulu. So you're gonna take 12,500 and you're gonna multiply that by 4.712%. And that will equal the 589, your tax. So the first page just shows you the total GET received for this particular transaction. And again, same as the previous sample DA, the breakdown of what checks are cut. So we'll go to the second page, which is the detail page. So this page shows a breakdown, same like the previous sample, but different in that there's GET tax. So we'll go line by line so you have a better understanding when you have a transaction that includes GET. So when you look at the commissions, 12,500, right? Times that by 4.712%, that equals the total GET received, which is 589. Okay. Now, if you go down to the middle portion of the DA, okay, you're gonna see GCI 12,500. Okay. You're gonna look at tax, and it shows 376.96. It's different from the total tax above. Now that's because the 376.96 is the GET tax that the agent is getting on their commission portion. That's what that is. So we're gonna go line by line. If you take the agent's net commission, right, which is 8,000 on this DA, if you take the 8,000 times 4.712%, that equals $376.96. Okay, so let's take the GCI, okay? GCI is 12,500, and right below it is the agent's GET, okay? The 376.96. Now, if you go below that, you'll see 13,000 So that amount, oops, excuse me, that 13,089 is the 12,500 plus the total GET, which is 589. So if you add those two together, it equals 1389. It's just showing the entire total commissions amount. That's what it's showing. So the 1389 is the entire commission with GET for this particular transaction on the buy side. That's what it's showing. If you go below that, you'll see associate commissions, and it says 8,750. So same thing, you're getting that amount because it's the 12,500 times the agent split, which is in this transaction 70%. So 12,500 times 70% equals $8,750. That's what the associate commissions amount is. And again, you're going to be taking the GCI again, the 12,500, and you're going to multiply that by 6% to get the associate royalty, which equals $750. And net commissions is your associate commissions minus the associate royalty, which will equal $8,000. That's the net commission. So when you look at the associate royalty of $750, that amount is also receiving GET because it's the commission amount that's going to be getting their 4.712 portion of that commission breakdown. So if you take 750 times the 4.712% GET, the royalty portion is getting $35.34 on GET. Okay, you're going to go down and you're going to see deduction, same thing, right? It's the total deductions that this agent is taking out from their transaction. And so for this one, you'll see it on the bottom, line by line, the risk management fee, $150, and home warranty, $555.81. That's the two deductions that's equaling the $705.81. Okay. Below that, you're going to see associate check, which is $7,671.15. So that amount is calculated by, you're taking the associate commission, you're minusing the associate royalty, which is $8,000. Then you're taking the $8,000 and you're deducting the $705.81. Okay. And that will not necessarily equal the associate check because this associate check, the 7671, is including your GET portion as well. Does that make sense? It includes your GET. That's why it's not adding up to, usually it's 8,000 minus 705.81, right? The deduction. But the associate check doesn't match up because it's including your GET. So let's see. We can break it down some more. So if you look at right below the associate check, you'll see company commission. That amount is the 30% that the brokerage is receiving. So the GCI of 12,500 times 30% to the brokerage equals company commission, $3,750. And when you add up the associate royalty of $750, including the royalties GET portion, and the company commission of $3,750 plus the company's GET portion, that equals paid to KW. That equals the $4,712.04. Any questions so far? Okay. So if you look on the top right-hand corner where it says total GET being paid out, I wanted to break it down for everyone. So if you take the GCI of 12,500 and you times that by 4.712%, it's $589. That is the total GET being paid out on this transaction, right? Now, the $589 is broken down and paid split amongst the commissions, which is royalty, the company commission, and the agent's commission. So the agent is receiving $376.96 in GET for their portion. The company, the brokerage, is getting paid $176.70 for GET on their commission, and $35.34 of the GET is getting paid to the associate royalty commission. Those three equal the total GET of $589. Any questions on that breakdown?
Are you sending the recording to us too, so we can go over this again with ourselves?
Yes, we'll send out.
Good. That'll help.
But if you do have questions, yeah, bring it up as well.
Hey, Kristy, this is Aisha from the Big Island.
Hi.
Hi. This is great that you're breaking this down. Don't you think, though, that there may be, just maybe, a better way to represent those numbers where it's not so convoluted? Like, it seems to me that it's convoluted at best because it's going to take an hour of explanation. And I've ran into questions like that when I got my DA and I didn't understand it. And I called my broker in charge and we go over it. She's confused. I'm confused. I think it might just be a matter of representation of the numbers. There's got to be, you know, like you would display all the options, all have to be on display. And if that option has to be activated, we turn that number on so that it's easy to follow. It's supposed to be, a person should only with a calculator who knows how to do basic algebra with subtracting and dividing and adding and subtracting. It's supposed to quickly be able to see that. I mean, I don't know what your input is on that. What do you think?
I think, like, just for the normal person, if you're looking at a DA without GET, I think it's pretty basic. But when there's GET and you look at page 2, it's like, I don't understand. Where are they getting these numbers, right?
Yeah.
But I think the rule of thumb is, to make it easier, is when you have a transaction that has GET, you look at the second page, right? And I think the rule of thumb that you'd be looking at is you're looking at the commission. So on the top right-hand corner, top right-hand corner, you see how it says commission 12,500, right? Right below the 500,000 sales price. The total commission is 12,500. All you're doing is, you know that 4.712% of the 12,500 is the GET being paid on your transaction. That's the 589. That's the rule of thumb. So that's fairly easy, right? You're like, okay, that I know that my total GET being paid on my transaction is 589. And I know I got that 589 by just multiplying my total commissions by 4.712%. That's the GET rate. So you're like, okay, that's what I know. Total GET is 589. But the breakdown of all the GETs, the 3 GETs, I know it gets complicated and it looks confusing, but I think what you can just think is, and I'll write down in the notes as well when I send this out, is everyone who's being paid on the commissions on your transaction will be receiving GET for their portion, always. So, you know, you can't say you're getting, you know, $8,000 in company in the commission as an agent, but you want an entire GET, right? Has to be proportionate to your commissions. So if you look at this, you just gotta kind of think of it as, okay, Total GET, 589. Out of that 589, I'm getting GET amount proportionate to my net commissions. So whatever is being reported on my 1099 is what I'm getting the GET for. That's the rule of thumb. Easy way for you to calculate what GET you're getting always is when you look at page 2 of your DA, what part of the DA are you getting 1099 on? The amount. It's the net commissions, always. Net commissions amount is what you're being 1099 on. So every time you're just gonna look at net commissions, page 2 of your DA, you're gonna be like, okay, $8,000 is what I'm gonna be 1099 on. That's my income that I have to report. So that number times the GET rate is the GET you're receiving, always. Does that kind of help?
I mean, I'm not questioning the validity of the final numbers. I think, you know, that is not up to the agent, you know, but I think the display, that table, I imagine can be improved. That would be my opinion. Not
Yeah,
that
I agree. I agree.
it's just, you know, like how you display the numbers should be very easy to follow from top to bottom. You shouldn't, I find myself when I print it out that I have to draw a map. I'm going this arrow to this arrow to that arrow, you know, for me to even make sense of it. It shouldn't be like that. It should be linear from top to bottom, or I'm following a number. Now I'm here, here's where I'm at. This deduction applies to me or doesn't. We're moving on, you know, and I should systematically be able to get to the final number by going through it. That's, I think it will be improving, you know, saving us a lot of money and time, basically, from having to call our broker and be confused about this.
I agree.
I think you're right that this is how it works. The mechanics is perfect, but the display can
I
probably.
agree. I agree.
Absolutely. Yeah,
Let
not
me-
having, and here, and not having that 35, 34 showing any place is, you know, okay, where's that number? It's not there. But you know that, and the 176.70, it's not there. Because I was going through mine too. I said, where are these numbers coming from? And because those numbers are not showing, it gets confusing as to what happened.
Right. So let me give you some backstory on GET and the DAs. Hawaii is the only state that has GET, right? And so with KWRI, everybody uses a DA, but they don't have GET, so it's not included. And so this was based on just for the state of Hawaii. And so when they developed it, it does look a little confusing. So, I mean, I can inquire to see if they can change how this tax is set up visually,
Right.
and the breakdown, because I think it gets complicated and it looks confusing. But
Kristy,
Yes.
it's Bob Wills again from Maui. Yeah, I think a single column for Hawaii and include a line for that covers that 3534 and that 176.70. And then you could have a column with the title, a column with the actual numbers in it, and then a column that explains the GCI is equal to X times Y. You could have it over on the right-hand side and you could just follow it right down. The question that I have is, when we report our income, we are reporting the income on net commission, not on associate check. Correct?
yes, correct.
Okay. Now, the net commission includes the GE tax that we collected on that sale, correct?
No,
No?
nope.
No.
Because
Okay.
the GET is not, the GET amount is what's given to you to pay for your
Pay
GET.
for that.
So you're not getting taxed. You're not getting GET taxed on the GET amount that you're receiving to pay it.
So it's a pass through. Okay, got it. All
So
right.
you're only paying GET on the $8,000 net commission, which does not include the GET you're receiving for this transaction.
I just want to make sure I'm not paying income tax on the GET that went to somebody else. You follow me?
Nope, you're not getting taxed on it. Everyone who's getting GET or everyone who's getting their split of the commissions is paying is getting 1099 on their portion. You're only getting 1099 on your net commissions. No one else's. The royalty is not being 1099 to you. It's not included in your 1099, and you're not reporting income on the royalty because it's not income to you.
Okay. Thank you.
Kristy, this is Nepali. Can you clarify? I think the GET that we would collect, I mean, we have to report it as income, right? Because you technically are paying GET on the GET you collected.
Well, the 1099, what we 1099 you is the net commissions. So on this, even though this includes GET, you're only getting 1099 on the $8,000, not the GET. Because you're supposed to be taking that 8,000 and paying GET, and then the GET amount that you're getting is to pay for your GET. So I don't know, because that's like you report that as income and you're being taxed on the tax money that you receive to pay for the same tax.
Right.
It's like double taxing you.
That's why the tax calculation is 4.7% when the GET rate is actually 4.5%.
So GET rate is 4.5% for the island of Oahu, 4% for Maui. But
right, I know.
The reason why it's 4.712% is because that's our sales tax.
No, it's not.
The Oahu sales tax?
No, it's the GET, but you're paying tax on the GET you collected. That's why they're allowing you to collect 4.7%.
Yep. Yep.
So when you pay your GET to the state, you're only paying 4.5%.
Yes, you're paying 4.5 on the 8,000 on the net commissions.
Mm-hmm.
No, you're paying it on the 8,000 plus the, in your example, 376.
No.
I'm pretty sure.
Let me investigate further on this.
Okay.
And then I'll email everyone on that too. Let me research this. That's a good question. That's a good question. Because what my understanding about the GET was, because everybody's like, how come we are receiving 4.712 instead of 4.5? I've gotten that question before. And it was because, I don't know what happened, but the state, the island of Oahu said that, okay, it was a cushion, like 4.5 is what you pay your GET amount, and the remainder of that was like a cushion. But it's okay, that's a great question. Let me figure out and get back to you on that. Yeah, I don't know.
It's the same thing on Maui, the difference between 4% and 4.166.
Mm-hmm.
What you have on Oahu is 4.5 versus 4.712.
Right.
It's the same deal. So just different numbers.
Let me ask. We can ask each Maui County and Oahu County on the GET department, and I'll get back to you. That's a great question. Any other questions regarding the GET? What I'll also do is I'll request a KWRI if we could even do like a better breakdown of the DA when it comes to taxes on the second page, and see if they can even help us or work with us to change it so that it's a clear breakdown of GET. And I'll get back to you guys on it.
Thank you.
Welcome. Okay, so this is just the amounts of the general excise tax amounts by island. Okay, and then who gets paid on GET on a transaction? The agent, the agent's brokerage, and also if you have a referring agent on your transaction, that person will also get their portion of the GET. Does anybody have any questions on this?
I know that's the way, that's probably the only way it can be done, because we're using the same percentage. So we have to, you know, time it by that 4.712 or whatever. And there's no other way to do it. But this does not, now I have a fundamental problem with this, because it makes no sense to send GET in money to somebody in Indianapolis that does not have to pay GET tax. So it's kind of like a, you know, how.
Oh, no, so they do. Anybody, so GET is a privilege tax to do business in the state of Hawaii, right? So anyone who does business in the state of Hawaii, including real estate agents, so in California, let's say, and an agent in California gets a referral check from someone on the Big Island, okay? They get a referral of $5,000, right? And there's GET on that transaction. That $5,000 they receive will include GET, because by law, they are supposed to be paying GET to the state of Hawaii for that referral. But you know, it's not us to force that on them, but that's the law. They do business in the state of Hawaii, they pay GET taxes to do business. They have to report it and pay it. It's not you or me to get their butts to pay it, but that's the law. They have to pay GET on it because they're doing business in the state of Hawaii.
Okay, so they owe the state of Hawaii the tax, the GT, just like we
For the
do.
income they receive by doing business in the state of Hawaii.
I see. Okay, thank you for clarifying that. I was not aware of that.
Yeah, so like even, yeah, anybody who does business in the state of Hawaii will need to pay GET. Even if they're a licensed broker, you know, licensed broker agent in California or Florida. They're receiving that income from our state. So they're doing business. That's why we give it to them. That's why the GET is given to them.
Okay, that's the first time I was aware of that. Thank you.
Welcome.
Makes sense, though.
Yeah. I think that's it. That's the breakdown. So that's my email address. If you guys have any questions that you can think of later on, you can email me. We'll send out the recording as well as the PowerPoint slides and the pending questions that I have for the GET and the page 2 of the DA breakdown. And we'll take a few minutes to answer anyone's questions if they have any. Okay, let's see.
Now, I just want to say, I like the form that you had that says, this is where this number is coming from. This is where this coming from. Your calculations, the formula thing that you had, you know, that sheet, that's very, very helpful to be able to go back and say, I got to subtract this. I got to add this. This is where this number has come. That was very, very good idea to have that sheet. And maybe that sheet should come with all DAs, you know, how it's calculated so that people might not have as many questions.
And that's what I was suggesting, that it's a one-page deal with 3 columns. And the first column is the title of what it is. The next column is the actual numbers, but the third column on the right would be how it's calculated. In other words, for that, it's this times this, that it's this divided by this. And so you could just follow it right down. Boom, 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 boom.
Yep.
It's been my experience with corporate dumb that if you say we need to change the form ain't going to get changed. But if you supply them with, look, here's a form I came up with that works better, then they're more likely to grab it. I'll work with you on it. I'll work with you on it, because I'll tell you, it's confusing to me. And I imagine it's confusing to a lot of other people. And if we had something that would simplify it, I think it'd do a world of good.
I think the only time it gets really confusing is when there's GET involved.
Right, but we got to figure out how to put that in there so we can make sense out of it.
It's not that I'm a math teacher by trade. So when I'm looking at that, and if I was confused as a math teacher, it's not that the calculations are hard. It's just that they're missing. You don't see them. And so when you don't have those numbers to work with, to say, okay, wait a minute, you know, where to go? How did it happen? So it's the fact that there's a missing number. And I think the organization, like he was saying, the organization, okay, this is what belongs to the agent. Just keep all the agent stuff. This is it. This is us. This is the company. Da, 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 da. And, you know, and this is, and then your paper of how those numbers are done. Yeah, that's what's necessary, is how are they calculated? And I think people wouldn't be as afraid of this piece of paper and wondering if it's right.
That's right. That's right. We should not be judging it every transaction. You know, this is probably wasting company time and agents' times, but it could be definitely improved. And you're like 90% there, but we need to be there for sure.
Do you guys find it more, is it just when there's GET involved in your transactions, or do you mean both?
No, it is confusing. I mean, I would agree with Anne. This is confusing.
It's good feedback. Thank you.
Yeah.
Any other questions?
The only thing that made it a little bit easier for me is when I saw in print those words saying, this is how this is calculated. And I go, oh, no, okay. I can take this one, you know, this column, this word that you told me minus this word, and I know what it is. Okay, that works out. And, you know, people with a basic math skill can do that on a calculator. They don't need to even have algebra, because it's just multiplying and adding and subtracting. That's all it is. But it's just knowing where the numbers are coming from. Yeah, and he's right. You're almost there. You just need that missing paper of this is how these numbers work.
It's all in the presentation.
Yep. Makes a good teacher and a not so good teacher.
That's true.
And unfortunately, you're given that piece of paper that you have to follow. And it's with those missing numbers, it's confusing. Because I spent an hour going over mine and I went, where'd this number come from? I got this, this, and this. And, you know, that's why I was so glad when this came up. I said, oh, good. Now I'm going to find out where all the numbers are.
Okay, well, you know what? I think what I'm going to do is that one pager, I'm going to revise it to add in GET calculations.
Yep.
And then I just got to think about where we're going to put it. Because if we include it with the DA, like a third page, then escrow offices are going to get confused because they don't need that. You know what I mean? They're like, what is page?
Yeah. See, so that's the other thing we don't know that you know.
Maybe if we just, I don't know.
Did they even look at the second page, Kristy, the escrow officer? Only the first page. They just want to know how to cut the checks into whom. The first page.
Escrow officer, yeah. That's all they want. They just want to know who am I paying each amount to, and you know, that's it.
How much? Right. Yeah. So when we are doing the commission in command, is it possible to have that something like an Excel worksheet already in the command so that it can automatically show all of these values, and somebody should be able to click a button and print out the DA from command? I mean, this is, you know, this would be so much clearer because us agents can go into command and we're entering all the information in the commission tab. We should be able to see it in command also, because there's nothing new about this, right? As soon as
the calculations is shown in command. The only thing you don't see is the GET.
Yeah.
But
so command also for Hawaii, it should have that available for the Hawaii agents.
Yeah, I agree. That's
that would really help.
We could add and request that. I agree. The GET should be added into commissions in command.
That would really help. The GET both in command and on maybe a third page or adjustment to the second page or something, but figure out how the GET piece would work. That would be a great help, because Anne's right. All of a sudden these numbers were missing, and how did we get there? You know, so
yeah.
Kristy, is the cap included in command as well? I don't
The cap,
remember.
oh,
Yeah.
your cap?
Yeah,
Yes, it is.
it is? Okay. I don't remember. I'll go back and look. Thanks.
Anything else? Let's see. I think in the very beginning, someone asked about profit share. They wanted a brief explanation. Are they still, is Sam here? Do you want to elaborate on profit share question? Okay. Let's see. Any other questions? Okay, what we'll do is we'll save the recording, send out the recording as well as the PowerPoint slides, and I will follow up with everyone on the same thread regarding the questions that we had for GET, the DAs, and making it a little more easier to understand the breakdowns. And I think that's it.
So Kristy, I can see your head is moving like crazy as far as your thoughts. I can see the thoughts going on in your head, like, oh, we can do this, we can do that. And I can see it going on. So good luck with that. I know you'll find a solution to this.
Well, thank you. I'll keep you guys posted for sure.
Thank you so
Happy
much.
Wednesday.
That was awesome.
Thank you much. Thank you very much.
Thank you so much. Appreciate it.
Anytime. Happy Wednesday, guys. Thanks
Yeah,
for
happy
the
Wednesday.
class.
Yeah, you too.
Bye-bye.
Bye.